The Nasdaq just had its worst day in over 17 months. Wow. Nasdaq down 6% plus in the past 5 trading days. Tesla stock is down over 13 percentage points in the past 5 trading days. Tesla stock is now down 41.2% year to date. Palantir stock down 10% plus in the past 5 days. Amazon down almost 7% in the past 5 days. Meta down nearly 7% in the past 5 trading days. Netflix stock got hammered today, over 9% down. That stock is now down around, we can call it 12% in the past 5 days. And Nvidia, look at Nvidia, down 10 percentage points here today, down 14.5% in the past 5 trading days. I thought this was a great time to talk about the Nasdaq and some tech stocks, and actually why next week these stocks could absolutely go beast mode. The setup is absolutely pretty incredible for these stocks, and there could be some major upside ahead, and I want to talk about exactly what's about to transpire this week and kind of my views on this, as well as I'll give a little bit of a longer term view as well. Okay, appreciate everybody joining me as always. Thanks so much for being here, folks. All I ask in return is for you to smash a like for this video. Smash that thumbs up button. Make sure you subscribe to the channel. We got some stuff to get into here today, folks. I appreciate each and every one of you. So, they were showing this on CNBC here today. Nvidia lost $300 billion. This is just since Monday. $300 billion of market cap. Apple, $178 billion of market cap. Mr. Softy, about $170 billion of market cap. Amazon, amazing's on $125 billion of market cap. Meta, $79 billion of market cap. Tesla, $77 billion. And Google McDougal, $42 billion. Nasdaq's worst day since March, or Nvidia's worst day since March of 2020, that's the Rona crash. So that's pretty incredible to think like Nvidia had its worst day since that time period, right? Now, it's very interesting because just a few days ago, I'd actually put this message out to the private group in the private group's Discord chat. I said, in the markets, at all times, you must be prepared for your portfolio to lose 60% of its value. If you can't do that, then you can't invest. You must always be prepared for insane losses in the short term. If you have a $500,000 portfolio, could you handle if that portfolio went to $200,000 in an epic crash? If the answer is no, then you can't be in the pool. If the answer is yes, then you're a sick freak like me and you're ready for whatever market. And I put that out because I thought there was a message that was really needed out there at that particular time. And I'll put it to you like this, okay? What has gone on this past week or so is extremely healthy and it's extremely needed in the market. It's very similar to us getting sick, right? Us as humans, we get sick from time to time, right? Maybe a few times a year. And one of the few great things about getting sick is when you get better, you appreciate your health, because a lot of times we can take it for granted until it's taken away from us. And then we're like, oh. And so when it comes to the market, many times we can take for granted these great markets, right? We can get very impatient and we forget about when we get sick sometimes and getting slapped in the face. And so that's why I put out that message, and then this came on top of it, so it was absolutely perfect. This is needed in the market. It's a must. And you can kind of come back, build back stronger, build back healthier. Corrections in the market, falls in the market, these all happen over time, okay? Now, a big component that they blamed why the market fell this week, and keep in mind, media is always going to find whatever to blame it on, but the big reason they're blaming it on is what's going on, Israel-Iran situation, right? And then what that could do for oil prices, what that could do for inflation, higher for longer, all those sorts of things. Does the stock market actually truly care about Israel or Iran? The truth is the stock market really doesn't. But in the short term, it'll make you believe that because we've got to blame it on something. At the end of the day, I always tell people, if the market wants to go down, it will find whatever reason it can latch onto at that particular time to have it go down. And if you can latch it onto this, then you can send stocks down. But here's the thing. The worry is like, oh, this is a bad situation, could get uglier, could cause oil prices to spike. Oil prices has actually gone down considerably over the past couple of weeks. So that whole notion about, let's blame it on this is why the market's going down, it doesn't hold weight. If oil was $90 right now, 95, 98, you say, okay, I get it. But at $83 and actually down considerably versus where oil price was just a few weeks ago, that just doesn't hold weight at the moment. And so I just think that's a little food for thought there, okay? Now, there's a lot going on here, and here's why stocks could absolutely go beast mode, specifically tech, specifically Nasdaq, specifically this week, okay? So, first off, in regards, it all starts before we get into Tesla. It starts with this situation. If there's no major escalation here, that could be very bullish for the market next week, because then that whole talk and risk out there is at least taken away in the short term, right? But then Tuesday after the bell, it starts. Tesla, my Esla. The first of the big dogs is reporting. Tuesday after the bell. Now, the stock's down 41.2%, and we're in the fourth month of the year. We're in April right now. That's a penny stock type move. That's something you would expect from a penny stock. Like, it just really got out of favor and no one wanted to own that stock, and there was just way too much selling pressure on it. And so it moved down 41% to start a year in April. You don't expect that for a massive company like a Tesla, right? But that's what's going on. That's what we have to deal with, right? When that move happens, you got to understand expectations are as low gets for Tesla. Like, I can't imagine a situation where the expectations going in this earnings, everybody is expecting bad numbers. If you listen to commentary from just about anybody in regards to Tesla, I don't know one Tesla bull that is excited about these numbers. I don't know one Tesla bear that is scared about these earnings. Not one on either side. So everybody and the grandma is all expecting dumpster fire of a quarter from Tesla and poor guidance if they give any guidance, okay? The expectations are 6 feet deep under the ground right now, okay? Now, in regards to the numbers, here's the deal. EPS is expected to be down 41+% in this quarter versus last year. Next quarter, the expectations also insanely low at nearly 31% EPS down. And I honestly think Wall Street's even more bearish than these numbers show. I really do, okay? Now, if we look at this current quarter, revenue is expected to be down 4.4%, analysts are at, and the next quarter expected to grow revenue a whole 1%, okay? So I feel like the commentary from folks out there is even more bearish than these bearish numbers. And that's just a little food for thought there, okay? Now, here's where things can completely flip and change in this situation, because I honestly think the numbers mean nothing. I do, in the short term, I do not think anybody's going to see Tesla's EPS or see Tesla's revenue and be like, I got to sell the stock. Those people already sold the stock. They already have, okay? But and everybody's expecting trash numbers for next quarter as well. But if you're talking about all of a sudden getting buying pressure out there, some people that maybe have gotten out of the stock and are waiting to get back in, or some people that are looking at this, maybe, some big money out there saying, might want to take a look at this one. I might want to grab some shares. There is something that could happen on the conference call that could start attracting major money and cause the stock to rise rapidly the day after earnings. And that is a big thing. If Elon and the team come out and say margins are going to improve in the second half of the year, profitability per car is going to improve in the back half of the year, it would be monumental for the stock. That would put a floor under it. Everybody knows, okay, Q1, Q2 are the floor. Elon and the team, they say things are going to get better in the back half of the year. That means the price cuts are over. That means, if anything, price rises are in the future. And that means Tesla, at least for the current lineup, is really going to be focused much more on profitability. And Wall Street would take that as a huge win in this situation, because the worry is Elon's just going to keep dropping prices. The team's just going to keep dropping prices again and again and again. And it's just a race to the bottom, and Tesla loses all margins, okay? So that would be monumental if they committed to that in the conference call or in the shareholder letter either. Now, another major thing is if Elon and the team basically say Cybertruck's ready for a major ramp in the second half of the year. If they feel confident they're going to be able to continue to ramp that baby over this quarter we're in right now, over the next 3 months, and then starting in the summer, they can go, pretty epic mode with how many Cybertrucks they can start producing. That could definitely make shareholders start to perk up and be like, ooh, okay, Cybertruck ramp. And if you could have something additional come out about, let's say somebody on the management team, the CFO or somebody, make some comments around Cybertruck margins could be extremely accretive to the company, meaning basically just a fancy way of saying very helpful to the company's numbers, that could be substantial as well. So if you could have those things come together there, which I don't think that's a stretch, I think that would be massive for the stock. And I think even though the numbers would be trash and everybody would be reporting how much Tesla's revenue is down and the earnings per share is down, even though that would be the report, you could see the stock actually go up 7, 10, 15% the next day if you had this sort of commentary. Are we going to get that sort of commentary is a big question. But if we got that, and once again, I don't think it's crazy to imagine. I can definitely see a situation where margins are improving in the back half of the year, profitability of the company is improving in the back half of the year. And I can definitely see a situation where, Cybertruck's production gets up to some pretty insane levels in the second half of the year. So I don't think that's far-fetched. And I'm telling you, if he comes out and commits that, it's huge, huge for the stock. Secondly, he already kind of did it on X, but he needs to do it in that conference call. He needs to kill off any of these rumors about Tesla's not going to produce a cheaper vehicle and any of that crap that's still out there being talked about. Because I even heard Dan Ives talking about it on the Reaction channel today. I'm like, what the heck is he talking about? He needs to kill off all those rumors. If he can do that, that gets the longer term focused people excited about what Tesla has going on as well, right? Because we do know the robotaxi opportunity is insane. August 8th, we're going to see what that's all about. But also, let's be honest, if they can have this robotaxi that's available for the masses as well at a price point of, in the 20s, brand new, the market share they could grab. I've always talked about this vehicle, and people used to laugh at me, and I said they need a two-seat vehicle. Very small, very compact, little room in the back for, a suitcase or two, and that's it. And it needs to have 150 miles of range, and that's it. And so small battery pack, small car, produce it really affordably, put the great tech that Tesla has in there, and watch sales volumes go absolutely insane, because I can tell you there's such a need for this sort of car in the market right now, because the fact is most people never use their other seats. Drive around in any city in the United States of America and you'll realize it's one person driving in that car, maybe two. And so that's the robotaxi opportunity. But he needs to kill off all rumors about, Tesla's not doing it, Tesla's not going to produce a cheaper vehicle, those sorts of things, okay? So that's huge. So Tesla's set up for some potential major upside this week, even though the sentiment couldn't be worse right now. But I'll tell you this, man, as somebody that's been investing in this company for a long time, the sentiment in Tesla can turn so freaking fast, you have no freaking clue, okay? I've watched this stock turn from ultra levels of bearishness to ultra levels of bullishness, and it's like, how did that happen? It happened so quick. I've watched people talking about Tesla's going to be a $10 trillion company, you're going to be able to retire on Tesla shares, to those same exact people suddenly flipping and saying, Tesla's not even worthy of an investment. It happens really quick, really quick. And so the sentiment you're seeing in front of you right now that is so negative in regards to Tesla, I'm just telling you guys, in 6 months, 3 months, 9 months, 12 months, it can be completely different than where that sentiment is today. And I've watched it flip several ways, several times over the past 7, 8 years. I can tell you that much, okay? So Tesla could roll. Now, also Tuesday after the bell, everybody's focus is going to be obviously on Tesla, but there's another extremely important company reporting. Its name is Visa. Visa is money. That's what we'll call it. Visa is money, right? Transactions all over the world. Visa is the big dog. They're reporting after the bell. Now, Visa needs to come in, and this could help out the Nasdaq tremendously. They need to report good numbers, but not too good of numbers. And I know that's weird, but basically Visa's got to come out. They've got to report really good numbers, but it can't be too good. And the reason it can't be too good is because if it's too good, then people are going to say, oh, the economy's too hot, inflation. So they need to have this perfect kind of balancing act of there's no recession in sight, guidance is good, numbers are good, consumer looks healthy, blah, blah, blah. But then they also need to not be too good where people are like, oh my gosh, the consumer's doing too well, I guess, okay? So that's going to matter as long as Visa usually comes in and just reports great numbers. As long as they come in, do their business, you aren't getting any tells of recession there, and you also, the numbers aren't too good, that could help out stocks tremendously. There's a lot of big money that's going to be looking at those Visa numbers. Now, on Wednesday after the bell, I saw a lot of memes over the past day. They said Zuck went from Mr. Steal Your Data to Mr. Steal Your Girl. Oh, gosh, that's so funny. Meta's reporting after the bell on Wednesday. My big dog, okay? Now, Meta sets up tremendously going into these earnings, okay? Check this out. So, Meta's at a forward P of like 23 right now, right? This is taken from 1000xstocks.com, which, by the way, 1000xstocks.com, I think we're getting close to 200 people on the wait list now for that. If you want to join the wait list for 1000xstocks.com, you can go to 1000xstocks.com and join the wait list. I think we're close to 200 deep, and we got our first folks using the service, and we should get some more folks tomorrow in the service as well. So Meta, it's not trading at a high valuation at all going into these earnings, and that's beautiful. I know the stock price has been a beast, but the valuation not high at all for this company. So that sets up well, because if Meta was trading at a 39 forward P, I might feel different. I might feel like, that could come down a bit. Next thing you know, we could be, let's call it forward PE, we could pull down to a forward P of 32 if the stock crashed big or something like that. Is Meta going to go down in any substantial way and go down to a forward P of 20? I don't think so, because the bottom line is already very undervalued, right? Now, if we look at the numbers, the setup's great here. I love this setup from Meta. So this current quarter we're in, 26% revenue growth expected for the company. I think they got that. If they don't get me started, if they come in with a freaking 3 in front of that number, 600 quick. 600 quick. I'm not gonna go there. I think they're gonna have a 2. I think it's going to be 20-something% growth. But I'm telling you, if they come in with a 30% growth number, it's game over. Meta's 600 plus, and it's 600 plus in like a very short amount of time. So 26% revenue growth, but I love this setup because then analysts are they're at less than 20% next quarter, right? Now keep in mind, political spend is going to be coming in. Now when that political spend comes in, it's not just about the money that's being generated from the political spend. It's about then there's going to be a lot more ads that need to be shown, right? Which is going to push up pricing for then businesses and companies, right? That's the way the model works. It's kind of like almost like an auction. And if politicians need to get out there and run their ads, and companies also need to run their ads, who's going to get shown? Who's going to get shown? Whoever pays up more, right? Which could definitely be very accretive to ARPU. It could be very accretive to what advertisers are going to be willing to pay. It's either you get seen or you don't get seen. And as a company or a business or a politician, you have no choice but to be seen. So you got to pay up. So less than 20% the June quarter. Then September quarter, less than 15% revenue growth expected. And then December quarter, 12.5% revenue growth expected. This setup is phenomenal. Is phenomenal for Meta. I love this. So we're going into this earnings with a stock that's not overvalued, and we're going in with a great setup like this where the stock's down going into the earnings, and we've got a situation simultaneously where, the revenue expectations will just go down and down and down throughout the year. So it could be a year where Meta just sets up to just beat those numbers throughout the year, right? Now, on top of that, EPS is another tremendous setup, right? Obviously, an explosion of EPS in these 2 quarters, the one they're about to report here, and next quarter as well, because these had a lot of one-time costs associated with the cost-cutting measures they did and things like that, right? So 97%, 58%. This might be where you see some sort of epic beat from Meta that no one really had foreseen. You might see something more epic here than actually on the revenue line, by the way. But then, September and December quarters, 12.5%, 15%. That doesn't even make sense. Doesn't even make sense. For instance, September quarter, analysts are at 15% revenue growth, and yet they're at 12.5% EPS growth. That doesn't even make sense. If Meta's buying back shares, that's going to help them out tremendously. Now, on top of that, this doesn't make any dang sense. I'm like, okay, you guys can put up whatever numbers you want, but it's just like this to me is like investing 102 type stuff, maybe not 101. That might be a little more base level, but to me, I'm just like, I just see these arbitrage opportunities. I'm like, are you freaking kidding me? They think Meta's going to have better revenue growth than EPS growth? Doesn't even make sense. Oh my gosh. And so the setup for Meta is epic. Epic. I love this. I love this. My gosh. And then that December quarter, 15% EPS growth with, 12.5% revenue growth. I mean, what a setup. That's the thing I love. It's not just about this quarter we're in. It's about the setup of next quarter, the following quarter, the back half of the year, right? Things are looking really good. Now, once again, if they come in and smash on EPS and they beat revenue, right? Well, then suddenly analysts are going to start upping all these numbers as well, right? Which will put more, then they're also going to have to come out, upgrade the stock. They're going to have to come out and, they're going to have to raise their target prices. They're going to have to come out and say it's a buy and it's a strong buy and just move more bullish, right? So the setups are tremendous for Meta. Now, also on the conference call, I can almost guarantee you they're going to talk about Llama 3 again and again and again. Now, some are going to understand what Zuckerberg and the team are talking about in regards to Llama 3. Some won't, and that's fine. But the people that will understand, I think it's going to matter for them significantly in regards to situation. Now, here's the deal, okay? Who's NVIDIA's biggest customer, or at least one of their biggest customers? It would be Meta, right? Now, NVIDIA could actually rally big on the back of Meta results. So let's say revenue and earnings per share is even better than expected. So let's say they actually up their CapEx a little bit. And let's say, they even mentioned something around, buying even more chips or things like that, right? Well, that could benefit NVIDIA. Phenomenal, right? At the end of the day, Meta's buying every chip it can from NVIDIA right now. And they're not the only ones. It's just about every one of these big tech companies. Literally NVIDIA couldn't send them enough chips, right? And I'd almost guarantee you Meta's going to be getting NVIDIA's newest, highest end chips as well, right? If you want to compete with ChatGPT, it's an arms race. And the arms race starts with NVIDIA, right? And so, Microsoft has to battle back. And at the end of the day, it all comes back to NVIDIA. And so NVIDIA is the one that benefits. And so all of a sudden NVIDIA could go on a major run this week as well, right? Now, on top of that, if Meta rolls, it could pull Google McDougal along the way on Thursday during the trading day. These stocks are very connected in terms of the stock price move. So let's say Meta's up 8% on Thursday. It could easily pull Alphabet, Google McDougal up 2, 3, 4%. Because people, especially if Meta comes out and beats on revenue, people will look and say, Google could come out and beat as well. Especially if Meta had good things to say about the guidance, then people will basically front run Google's earnings, which Google earnings are Thursday after the bell, okay? Now, in regards to Google McDougal, it's another stock that's not trading at a high valuation at all either. Forward P of like 22 on this one. It's a dosey-do. I mean, come on, baby. That's easy. That's cake. This is easy, sleepy numbers for Google McDougal. Remember, Google, up until recently, has always been a company that pretty consistently grows around the 20% mark when it comes to their revenue. So as far as where analysts are at, 12%, 11% for next quarter, 11% for the December quarter, 10%. I mean, this is an easy, sleepy setup for Google McDougal here as well. So Google could roll as well. And here's a beautiful thing. Now, you got to see these stocks all pull each other down over this past week, right? And you got to see, this stock pulls down this stock, and this stock pulls down this stock. It works that way, but it also works the other way in regards to the positive, right? Here's the deal. If Meta reports great numbers, right, it's going to pull up Google on Thursday. Then if let's say, Google then reports great numbers, then it could actually pull Meta on Friday, right? And then Meta and Google together can pull NVIDIA. especially if they at least confirm they're spending as much as on chips as they thought and on CapEx in general, or if they even up that amount a little bit, because let's say revenue is trending better. Let's say the business is trending better, so they're going to up CapEx another $1, $2, $3, $4 billion. That's just going to pull NVIDIA along with it. So all these stocks are interconnected, and if one report's really good and another, it pulls each other along. So that could get very fun very quickly, right? Now, that leads us to Mr. Softy, the biggest big dog of them all, the biggest market cap, right? It overtook Apple as the biggest big dog out there. This stock's down 6.5% or so in the past 5 trading days. They're reporting earnings this week. And what do we know about Mr. Softy? Mr. Softy comes through. Couldn't it go 5 for 5 in terms of revenue beats and EPS beats? 4 straight quarters it's come in with very nice earnings per share beats and very nice revenue beats. I think they're going to do it again. I have no reason to disbelieve Microsoft's going to come through with the numbers. They do it every freaking quarter, man. They're 4 for 4 in a row. 22-cent beat, 14-cent beat, 34-cent beat, 16-cent beat. Those are extremely impressive. $1.8 billion revenue beat, about a $700 million revenue beat, about a $2 billion revenue beat, an $890 million revenue beat. Don't be surprised if Mr. Softy goes 5 for 5. Now, in regards to Mr. Softy, it doesn't move a lot. And this is important to understand, okay? Meta can move huge. NVIDIA can move huge. Google can move, let's call it mid-size. Mr. Softy's pretty lame. Pretty lame. Check this out, okay? For instance, the last earnings, the move was predicted to be 4.7%, which is pretty lame. Anytime your move is less than 5% after earnings, you're a pretty sleepy stock. It actually moved like 2.7%. And if you look on average here, Mr. Softy moves about 3.6%. So whatever Mr. Softy reports, it's going to probably be a small move. It will probably be less than a 5% move if not less than a 4% move. But knowing Mr. Softy, they're probably going to come through and report good numbers, and that's going to put another good halo around the Nasdaq and these tech stocks in general, right? Now, this leads into Amazing's on, which Amazing's on's the following week, but Amazon stock's going to move this week, and here's why. Amazon's now the 3rd biggest advertising giant out there, only behind Meta and Google, right? So let's say Meta and Google report very good things to say about the advertising business. Well, guess who that means great news for? Amazing's on, right? It means great news for Amazon. And then Mr. Softy's reporting, and they're going to have commentary around the cloud. If they report some pretty impressive cloud numbers, and it's not really based upon taking market share necessarily, it's just new opportunities out there, then that could bode very well for Amazon as well, right? And so a little food for thought in regards to that, which once again, these stocks all pull each other. So if you look at the biggest weightings for the Nasdaq 100, you're going to find 5 of the top 10 companies are reporting this week, right? Google's listed twice because they had their separate kind of class of shares there. But basically 5 of the top 10 companies are reporting this week. And then you got 2 of the top 10 that will be indirect moves, which would be NVIDIA and Amazon. Those would be big indirect moves, right? Based upon these earnings overall. So this could be a pretty epic week. The setup is beautiful. If we don't get any black swan event, I think it's looking pretty dang good for this week. Now, with that being said, I'm mentally ready for at this time next week my public account to be at 1.7 million. I'm ready for it to be the same as it is right now, like 1.95, 1.96 million. I'm also ready for it to be 2.3 million. And that's an approach you really got to take in a market in general. Although I believe the market sets up very well this week, I'm not going to get my hopes up. I'm not going to say, let me go buy $50,000 worth of QQQ calls or something like that. No, that's not worth my time. I think it's probably going to go beast mode this week, but I'm invested for the long term, right? And so if they want to sell NVIDIA off this week, I'll pick up shares of NVIDIA. If they want to sell Tesla off this week on these earnings, sell Tesla down to 135. I would love that. They're probably not going there, but if they want to, give me. I'm in buying mode for Tesla. Give me as many shares as you can. A lot of people have been wanting to buy stocks like NVIDIA, Meta. They've been waiting. And I'm not just talking about retail. I'm talking about Wall Street just waiting for these stocks to do something, go down, please, please, please. And so, you got to be mentally ready for all these things. And so these are all ththings and concepts I talk about in the private group, right? All my course curriculums that teach you everything I know and I've learned in the past 15 plus years of being in this market. And, one of the things I'm most proud of is just making a group of like-minded investors that, we don't, when these short-term drops happen in the market, we don't freak out. Like, it is what it is. It's just a buying opportunity for us, right? Like, give us shares for cheaper. We're playing this game for the long term, not for this short-term stuff. Everybody gets so caught up in the short term. We're playing for the long term, right? So anyways, if you want to apply to join a private group, that'll be the pinned comment down there today. And you get access to all my course curriculums, the 6 and 7 figure Discord chat with myself, a ton of like-minded investors. And, we have folks from all different types of net worths, we have a very intelligent group of investors in that particular group there. So if you want to apply to join us in there next week, which is going to be a very exciting week in there, you can do so with the pinned comment down there. Much love and have a great day.